Okay, so you have R1000 that you want to invest. You're a beginner investor and you don't know where to start. Well, if you are new to easy equities, you can make use of some basic resources over here. So let's say you want to buy stocks. So you would go to equities and click on the tab, and you have a category section over here. Now you can take a look at top 40. So if we click on top 40, you will have all of the top 40 shares that you can invest in. So you will notice that they are all in random order, or actually usually these are in alphabetical order. So you can see it starts with ABSA and ARM and so on and so on. However, let's say you want to look at a particular sector. So you could take a look at your sectors over here. Let's take a look at the first one, which is banks. And here you will have all of your major banks, and you can invest in each one that you would like. Now, if you have R1000 and you want to invest and you don't know where to begin, well, you will have heard a lot of people speak of diversification. Now, diversify means essentially not keeping all of your eggs in one basket. If you don't know the saying, don't keep all your eggs in one basket. If one sector has to experience some type of volatility or risk, the share price of all of the shares or stocks in that sector might all drop at the same time. So let's say you want to focus on financial institutions or banks, and something huge happens in the banking sector. Let's say there's a downgrade in the banking sector by one of the financial institutions, grading institutions. You could see a general price drop over the entire spectrum of stocks. So what you want to do is you want to invest in a number of different sectors on the JSE, and this is just JSE, this is not international shares or overseas shares. So you would maybe take a look at one or two of the banks and then maybe invest in a different sector, let's say mining or so on. You can take a look through these. You have electricity, financial institutions. Now financial services is slightly more diversified than banks. These are investment companies, and here we have a whole spectrum of them. All different investment companies and companies that offer financial services, for instance, insurance, investments, wealth management, and so on. Let's take a look and move forward. Let's maybe take a look at mining. Okay, industrial metals and mining, that seems to be pretty hot at this stage. So you have ArcelorMittal, which is to do with metals, Gemfields, which is diamonds and precious stones and so on, all mining. Montenegro, not sure who they are, but anyway, here are all of your, or some of your mines, not all of them. Let's take a look at, I know that there is a general mining one. Here we go. So here are all your mining companies and mining investment companies as well. So African Rainbow Minerals is an investment company. Anglo Platinum is obviously a mining house. So that is a number of mines that they own. Anglo American PLC and so on. BHP is the old BHP group, which is now BHG, as they've now combined two of their companies. I think it's the Australian, I'm not sure. But so what you could do is, let's say you have your R1000 and you want to now invest. You would look at a sector and you would go through each of these companies and see what is their market share. So market share, what does that mean? It means how much of the market does that company own, or let's say how much of the share do they, or how much presence they are, let's say, is maybe the best thing, as compared to their competitors. So what I usually do when I'm looking at a stock that I want to invest in, I will do what's called a SWOT analysis. If you've never heard of a SWOT analysis, maybe most people have. But what a SWOT analysis just looks at your strengths, weaknesses, opportunities, and threats that are, you know, that are to do with the company. And you would then analyze that. You would analyze what is the strength, let's say for instance of Anglo Platinum at the moment. So what is the strength of Anglo Platinum? They are in the PGM market, which is your sort of precious metals. That's platinum or platinum range, platinum, palladium, rhodium, and so forth. And those are commodities at this moment that are quite in demand, so that is a strength. Now, you know, you would look at the weaknesses and opportunities and the threats when it comes to Anglo Platinum. Let's say Anglo Platinum at this stage is fairly strong, it's in demand, and there's quite a long range of years that they still have to go when it comes to their platinum mines. They are mainly in the sort of Rustenburg area, and there's some longevity there. Some of the mines go up to 50 years before they would have to now start shutting down. So there's a lot of strength in that. Gold at this stage is a safe haven when it comes to the current world situation, where we have the invasion of Ukraine. So a lot of investors are now using gold as a safe haven, so therefore it could potentially push the price up of gold mines and the gold index as well. So that's more when we come to ETFs and so on. If you are a beginner though, you could invest in stocks as it is here. Your other option is to look at what's called ETFs. So if we go over to ETFs, we have the whole list over here, and you can, what's nice about Easy Equities is that you have some risk management here that you can do. If you're looking for share baskets that are aggressive, you would now choose here, or share baskets that show a gradual growth, you would look at your low risk. So it depends on how much risk you want and your risk management, or if you just want something in the middle, you could say moderate. So let's just take moderate for now. And you could look at this range of ETFs that you can invest in. Well, if you don't know what an ETF is a exchange traded fund. Now what that is, it's a fund that is created by a company that invests on your behalf in a huge basket of stocks. So it takes a lot of the thought process out of it for you as a beginner investor. So it's actually ideal for a beginner because they put in all the thought and analysis and strengths and weaknesses, and it depends on, like we say, your risk profile that you would like in your portfolio. You know, with risk, if you take an aggressive viewpoint, you've got a lot of chance of your portfolio growing rapidly. However, it can also decline rapidly as well, because these are risky investments. These are stocks that move up and down a lot, and therefore affect the ETF a lot. If you're looking for slow, gradual growth, then you would obviously take a less risky group. But so what an ETF is like I say, it's a group of stocks that are invested on your behalf by a fund and a fund management team. Usually, let's say for instance, you choose, let's say this Satrix one. You'll get the ticker here, and you'll see the performance here, and you'll see what are the selling at and buying at and quoted prices, and you can get a general idea of how it's performed. So let's take a look at the maximum. It's performed 25% in growth. This is now the Satrix LB, and if you don't know what that is, You can check it out on some of these links here. If you actually go onto Satrix itself, you will be able to, or let's say if you're invested in the Satrix company itself, I am one of them, you get a minimum disclosure document which you can open up, and that lists all of the companies that they are invested in and the percentages that they are weighted in, because you will have certain companies that, let's say, a fund weights more than other companies because of their performance. So that really determines your risk management as well. So if you have 1,000 Rand and you don't know where to start, this is probably the best, because you don't have to really do a lot of the analytics and fundamental research. They do it for you on your behalf. You just need to take a look at how the fund has been performing over the last period. So something that is very good to do, something that I do, is I keep a journal of my investments and why did I invest in a stock or an ETF. So you would have these questions that I would answer before I actually press the buy button. I like to list the reasons why I am investing in this, either this fund or this stock. So you would answer the questions: why this sector is number one. So let's say you want to invest in the banking sector, then you would ask yourself, okay, so why am I investing in the banking sector? And if you can't really answer the question, then you shouldn't really be buying the stock just yet. If the answer to the question is everyone else is buying it, that's not really a great answer, because these things are transitory. They pass, they are fashionable, and fashion changes. So that's not really a good answer to say I'm investing in the banking sector because I see everyone else is investing in the banking sector. You should be answering the question, why are they investing in the banking sector? If you can come to that answer and that makes sense to you, then yes, sure, you can pull the trigger and buy that company or that ETF. Now you would answer the question as well, why am I investing in this company? So let's stick with the example of banking. Let's say you want to invest in Capitec. Then you should be able to answer the question, oh well, I'm investing in Capitec because it shows great growth, or it shows stability, or the company is very strong in the sector, it has a large market share. You need to answer those questions for yourself. Now, things that you want to look at when investing in a company is the growth or the resilience. How resilient is a company? What are its advantages as compared to its peers? And is the price undervalued? That's really important as well. If a price is running really high and really, really hot, you might want to just wait a little bit until the price drops a little bit, because after all, the idea is to grow your portfolio. You don't want to be buying something at a high price and then that's the highest it'll ever be, and then it sort of declines. You can end up doing that, and then your portfolio you'll start to see going into the red, and you'll be wondering, why did you ever even invest in the company? So sometimes you should be analyzing how high is the price relative to before. Let's take, for example, Capitec. Now I'm using TradeView over here, and this is a great platform to use when you want to take a look at some charts. So you can see here is the price all the way up here, and where was the price in the last couple of weeks? A lot lower. So this price is running fairly hot at the moment. So it wouldn't be advisable to buy it. I mean, take a look at it compared to before. It is really staggeringly high. Now, of course, it's showing a lot of growth. I mean, if you had bought it here, and let's say you just ignore this, let's say this has not happened yet, and you buy it here, or you take a look here and you say, wow, this price is higher than it's ever been, and you bought it here, and you start seeing a decline, it's like, oh no, my shares are going to the red, and then next minute, boom, boom, there it recovers and it goes to an even higher high. So, there's arguments for and against it, and there you would now look at the fundamentals of the company. How strong is the company, and how what is its market share? Is it really competitive in its sector, and is it a company that shows a lot of growth? Well, you can see Capitec has shown very, very good growth at this stage. You might buy it here and it might start to decline and go all the way back down to this sort of average, and then you have to employ a different type of strategy, or it could go up there and come back down there and carry on up again. You don't know where this might end up. Now your other analysts, if you take a look here on the side, they putting a price target at 2,032 rand, and it's currently at 2,211. So they are expecting that this might decline down to about 2,030 something, somewhere around here, in the near future. Or let's say 1 year price target, which is, in terms of investing, near future. You can take a look at the performance of Capitec over here as well, and this is a great resource for taking a look at whether you want to invest in a company or not. You can see, like, very, very clearly where the price has been, where it sort of stayed the range and then decided to break out of the range and go higher. It may sit in this range for a year or so and then suddenly go higher again. You don't know. No one knows where the share price will go. The idea is, though, to equip yourself with the information as far as possible. Now, when you're taking that 1,000 rand and you want to start investing, the best thing to do, in my opinion, and this is what I've done, is to look at maybe 3 or 4 or 5 maximum sectors, and then invest in those sectors. That way you're now diversifying your sectors and you're diversifying your companies. And if it's ETFs that you're investing in, is to also diversify your ETF portfolio so that you're not investing all in one sector. So I hope that this helps. If you like this video, give it a like and give it a subscribe, and I will be posting more beginner videos, beginner investor videos, and so I wish you good luck and good fortune.